Hello there, this is James, and you're watching Tixee Live. And a very good morning to you all. In today's program, there's a few things I'd like to discuss. One is some news from the World Bank. Plus, I want to ask the question, is China our only hope? But before I get into that, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get to it. So what's happened today? Well, today, we've had the World Bank basically warn of recession. Yes, the dreaded R word has once again popped up. We were talking about that a couple of weeks ago when this was greatly feared, but now the World Bank has warned of recession, certainly around the emerging markets and certainly a potential global recession. In fact, what they have said is, or actually what the president has said, the president of the World Bank has said, he said the war in Ukraine, lockdowns in China, supply chain disruptions, and the risk of stagflation are hammering growth for many countries. Recession will be hard to avoid. With inflation now running at multi-decades highs in many countries and supply expected to grow slowly, there is risk that inflation will remain higher for longer. Pretty scary stuff. But then what a lot of people ask me, they're saying stagflation a lot at the moment. Stagflation a lot. A lot of people asking me these questions. What is stagflation, James? What is stagflation? Because it's all very good when, World Bank president says it and other experts say it. But those who don't know what stagflation is basically when you have a risk of high inflation and slow growth. And in fact, the World Bank has actually lowered its forecast, and they now predict global growth between 2021 and 2024 is now projected to slow by 2.7%. 2.7%. And here's an interesting thing. Remember, like I said about stagflation, when you have high risk of inflation and low growth, the last time the world experienced stagflation on a global scale was in the 1970s. And that projection of slow growth growth slowing down by 2.7%, that is twice as much as the growth during the 70s, during 1976 and 1979, when the last time the world experienced stagflation. So it is pretty scary. But I want to ask the question, okay? And this happened a couple of trading sessions ago last week. I asked this question again. He mentioned in his comment, don't forget, Ukraine and China lockdown. Now, China is coming out of lockdown. Slowly but surely, they're coming out of lockdown. So is that going to make a difference to the world, to the global economy, with China coming out? Because clearly, if they start coming out of global recession, then demand is likely to increase again. So give you a prime example of this, and we'll have a look at the chart. Alibaba, currently their shares are 11% higher. Currently 11% higher. So it shows that demand is slowly growing in certain sectors. Apparently the 11% growth is down to gains, the gaming industry. So we've talked a lot about the tech industry being under a lot of pressure so far this year, like the Nasdaq being down almost 37% or so. I can't remember the exact percentage, but really struggling this year. If the gaming market is improving, certainly for Alibaba, and that's why their shares are 11% higher, there is room there for growth. So possibly, is China here to rescue us, avoid global recession? I'm not sure, because obviously, China coming back into play will make a big difference. But I think that on the other side of things, the labor market is pretty strong across the board as well. Certainly, in the United States, the UK, Europe, the labor market. If we start seeing the labor markets starting to decline, then I don't think even China can help us or help themselves as well. So that is the one question I want to ask. I think China will make a big difference. And I think there are a lot of times when we talk about them coming out of lockdown, does make a difference. But let's have a quick look at Alibaba's shares at the moment, see how they're performing. Like I say, as you can see at the moment, they trade around $104.33. So they are 11% higher today. And like I said already, that is down to the gaming sector, improving in the gaming sector. So maybe, just maybe, that could be the opportunity to get us away from this fear. So yeah, that's Alibaba at the moment. Other stories. Now, the dollar yen. We spoke about the dollar yen yesterday, trading at a 2-decade high. It's currently on the move higher again. And the question now, of course, is the dollar yen on course for 135? Let's have a little look at it. Let's have a look. Pull my chart back up. So yeah, extremely, again, remember, we have this conversation. That one, here we go, dollar yen. Okay, it's currently trading at the moment at 133.61. Okay, 133.61 is still a 2-decade high. So the question being asked, is it on course for 135? There is a very strong uptrend on this pair currently as it stands. And don't forget, we had this conversation yesterday. Bank of Japan's interest rates, minus 0.10. US interest rates currently 1%. With the chances of the Fed doing further hikes. So the bulls are very much with the dollar against the yen as it currently stands. So that's an interesting one to watch. You have got a strong uptrend. Again, it's trading above the 200-day moving average as well. So there is a bullish momentum with this pair as it stands. So what else is happening? How is the markets acting at the moment? Well, despite the fact that the World Bank did warn of recession, the markets are pretty tepid at the moment. I mean, we had some growth yesterday in the US stock market, and I'll pull up the charts so we can have a look at a couple of things again now. But at the moment, they are a little bit tepid. The cable managed to get a little bit of a bullish momentum late in the US session. It has since lost a bit of that momentum. It's still trading above 125, though, currently trading at 125.48. Again, a move above the 100-day moving average, which is giving it a little bit of a potential support area, and above that key level, which we've looked at for many sessions of 124.95. Euro dollar, again, fairly sideways at the moment, currently trading at 1.06874. I expect it to be a little bit like that until obviously tomorrow, when we have the ECB interest rate decision and press conference, which will be really interesting. There is some news coming out today, which I'll talk to you about in a minute as well, which can affect the euro, but currently trading at 106.88, so 106.89. Again, it's under the 50, the 100, and the 200-day moving average. This is on a 1-hour chart. So remember this, my story yesterday. I discussed about Target. They did open lower, but not as dramatic, actually. Not as dramatic as it did on the 18th of May when they first lowered their initial forecast. But it's closed around about 156.17, so still slightly under pressure. It did open with a gap, but not as dramatic as the 18th of May, the first time they announced that they downgraded their forecast in their profits. So that's how the market stands currently at the moment. Coming up today, though, okay, is the EU GDP, gross domestic product. That's going to be announced at 9 a.m. UTC. Expectation year on year is 5.1%. That will be something to watch. I don't think the market's going to be terribly surprised, though, unless it's something really dramatic. Because like I said already, I really think Euro traders are going to be really keenly watching for the ECB tomorrow. ECB tomorrow, certainly the press conference. Remember what I said, I can't do a live on the press conference, unfortunately, but I will do a special after the event to explain what was said and how that could potentially affect the market. But still, keep an eye out for EU GDP today. Like I said, due at 9 a.m. UTC. But of course, the big one is Inflation Friday. That's what I'm calling it, Inflation Friday, which is, of course, the US Consumer Price Index due on Friday at 12:30 p.m. UTC. That I will do a watch along, and I believe that is something the market is really anticipating something with. They're really, they're going to watch that really closely, to see how that comes out. So please join me for that. Remember, that's going to be, I'll be on about 12:20 p.m. UTC to do the build up live. So please feel free to come and join me. European markets, as they stand, currently the FTSE is down negative 0.39%, DAX negative 0.13%, and Eurostoxx negative 0.12%. So it's fairly a bit tepid, lukewarm at the moment. Okay, like I said, or mentioned, EU GDP today, ECB interest rate decision. Don't expect them to do anything with the decision, but the press conference, everybody's going to see how hawkish they're going to be, what they're going to say, and what they're going to do next. So that could be important. But of course, inflation Friday is the big one, which is CPI on Friday, US CPI, which again, like I mentioned already, because I'm so excited about it, I will be doing a watch along for that event. Okie doke. Don't forget, you can ask me questions anytime you want. Oh, there's a comment. Let's see if is it a question? No, not a question. Oh, well, never mind. Yeah, so anyway, don't forget, you can ask me questions anytime you want. This is what I'm here for. I'm an educator. I am a commentator. So feel free to ask me anything anytime you wish related to the market or, anything you like indeed. Maybe you want to ask me some stories from my trading experience or what's happened in the past. This is what I'm here for. But okay, failing in that, and there's no questions. Don't forget, I'm back on again this afternoon at 1 p.m. UTC. So please feel free to come and join me for that. We'll talk about what's happened so far in the European session, what to potentially look out for in the US session, and we'll talk about the EU GDP and anything else which has come out from the World Bank and their warnings. If you're watching me on Facebook, please feel free. If you like it, give us a follow. If you're watching us on YouTube and you like it, please feel free. Subscribe if you like. Hit the notification button next time I'm going live. If you enjoyed this little episode, found it interesting, find it insightful, give me one of these. It'll put a smile on my face. But anyway, till later this afternoon, 1 p.m. UTC. Remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.